about interest, how about mortgage? 875,000 mortgage holders now owe more on their homes than the homes are worth, the highest rate in 3 years per ICE. Now, as we know, this is something called being underwater on your loan. It's more common with car loans, but now it's starting to become a reality of mortgage holders who a lot of them owe a lot of money on their homes, and the homes are just not that valuable right now. In fact, they're starting to taper off.
Yeah.
Probably some of the most overvalued at the moment. And a lot of these areas are areas like Cape Coral, Florida, where there's some uncertainty.
Yeah. Hold on a second. I'm so happy you said that. Go ahead. I didn't mean to interrupt you.
No, please go on. I mean, you're the one who's in the area, so you probably have more boots on the ground.
Yeah. No. So look, right under here, Grok. Where are these homes underwater? Where are these underwater? Jeez, Louise here. Grok, where are the homes that are underwater? Where are these underwater mortgages? Somebody asks. Grok says, concentrated in Sunbelt areas, Florida, Cape Coral, which is my neck of the woods, 11%, and Texas, Northport, also my neck of the woods. Maybe we can go shopping around for underwater mortgages, see if we can get a good deal, Conch.
I don't know if that's how it works.
Well, I don't think that's how it works. I'm not too sure. Real estate is not necessarily my forte. But you got to imagine houses that get foreclosed on, I think you can get for deals when the bank, goes and takes your home. Look, I'm not a homeowner. I don't know. I rent an apartment. But according to November 2025 ICE Mortgage Monitor, underwater mortgages are concentrated in Sunbelt areas. Cape Coral, Northport, Texas as well. Austin, 7%. Have the highest rates, especially for 2022, 2024 loans. So for these new homeowners, or at least people who have gotten new loans in the past 1 to 3 years. Other spots include Phoenix and Tampa, still that Florida area. Low rates in the Northeast, Boston, New York. Certainly.
I think something to remember, though, Chris, is just because you're underwater on your loan doesn't necessarily mean that you're getting foreclosed on. Those people are going to be continuing to pay their mortgage every month. In theory, although we have seen a high rate of delinquency, who this is really risky for are the mortgage companies, are the banks that are giving out these loans where if they end up not being paid back, the bank is not even able to sell the home to make up those losses. So this is really more risky for the major institutions, the big banks, than it is for those individual homeowners who, if they actually had to cut and run, they could probably move back in with family or what have you. But the banks are going to be the ones who are kind of just hanging out, wondering what to do.
Yeah. And this goes down. And again, we looked at, I think it was 300 something. What was it? $300 billion of unrealized losses in quarter 4 or quarter 3 for the U.S. banks. Is that what we looked at? I think it was last week we looked at that, or maybe it was Monday we looked at that.
Yes. So they made some bad investments.
Yeah. All right, folks. The wake-up call is